The markets are crackling tonight with astonishing volatility as the Vietnamese Dong and the Iraqi Dinar find themselves thrust into the spotlight. An explosion of speculative trading activity is rippling through Forex markets, igniting alarm and fascination across global financial centers. Traders, analysts, central banks, and everyday investors are watching closely, sensing both opportunity and peril in currency moves that may signal deep underlying shifts or mere noise in a crowded digital sea. This is not just a fleeting flash in the pan. Appetite for VND and IQD is surging with intensity rarely seen outside of headline-grabbing crises. You will hear urgency in every trading floor corner, in every nervous desk voice. How far will these currencies fall, or could they soar? The Vietnamese Dong, historically a slow-moving, tightly managed currency, has suddenly found itself at the heart of speculation. Fueled by persistent rumors of potential loosening of capital controls, whispers that the State Bank of Vietnam is considering a managed float, and heightened demand from overseas investors, the VND has entered a new phase of attention. Volumes in offshore trading hubs are spiking. For months, state authorities have resisted allowing the Dong to move freely, tightly anchoring it to a narrow band relative to the dollar. Now, even the faintest suggestion that policy is shifting has triggered a wave of positioning. Short dollar-long VND trades, futures contracts, digital platforms offering unrealistically favorable forward rates. Market participants are calling it one of the most explosive speculative surges in Southeast Asian currency history. The urgency is palpable. Institutions and hedge funds believe that if even partial liberalization occurs, the Dong could appreciate sharply, catching many off guard. At the same time, the Iraqi Dinar, long a fringe player in speculative Forex circles, is experiencing its own dramatic revival. After years of muted movement, rumors of reform, oil revenue windfalls, or even a redenomination are generating fervor on social media, chat rooms, and unregulated trading platforms. Scam warnings notwithstanding, demand for IQD, especially exotic currency tokens, has jumped almost overnight. Some investors speak in hushed tones about potential multifold gains. Others warn that fanned by hope rather than fundamentals, this could be a repeat of hollow promises. Still, brokers report order volumes for dinar purchase requests soaring, with many speculating about whether this is harmless fervor or a precursor to serious volatility. Institutional watchers, sitting in dimly lit war rooms, are scrambling to weigh whether these moves reflect shifting economic fundamentals, credible policy signaling, or something more ephemeral. For the Dong, analysts note that Vietnam's economy continues expanding, supported by resilient exports and foreign direct investment, but inflation pressures and external balances remain sensitive. If the central bank were to hint at loosening control, even gradual reassessment could lead to appreciation or sudden correction, depending on sentiment. A coordinated intervention or measured messaging from Hanoi could calm nerves. Missteps or leaks could amplify speculation into a cascade. With the dinar, the picture is murkier. Iraq's economy remains heavily oil-dependent, with political instability and structural fragility ever present. Speculative stories about redenomination or financial overhaul may reflect wishful thinking or strategic influence by brokers looking to drive demand. Some experts caution that without credible, transparent policy shifts led by the Iraqi Central Bank or Finance Ministry, gains may be illusory and fleeting. Yet social media frenzy and fear of missing out are powerful forces, capable of moving markets even in the absence of substance. Across the spectrum, experts warn that in such environments, liquidity can evaporate at the worst possible moment. Retail investors drawn in by viral claims may find themselves unable to sell if pricing dislocates or platforms shut off. Overnight, what seems like a speculative windfall could morph into a liquid entrapment. Currency traders worldwide are sharpening risk models to account for sudden spikes in bid-ask spreads, margin calls, and potential regulatory clampdowns. This is the reality of explosive speculation. Gains can be outsized, but so can losses, and often more swiftly. While some hedge funds are rolling out aggressive strategies around VND futures and forward contracts, others are moving cautiously, increasing collateral buffers and setting tight stop-loss thresholds. For Iraqi dinar exposure, Most institutional desks are flat-footed, preferring to monitor rhetoric from Baghdad, oil output forecasts, and any policy whispers before taking new positions. The prevailing narrative among professionals underscores patience. Speculative excess burns out quickly unless underpinned by measurable economic shifts. In both cases, social media has become both fuel and fire extinguisher, depending on the narrative. TikTok-style explanations about dinar revaluation soon, or dong doubling are met with skeptical reposts by macroeconomic experts who point out that redenomination is entirely discretionary, possibly destabilizing, and politically fraught. Yet the volume of posts, videos, and chat room fervor is undeniable. Some claim they have inside information, others joke that they're buying physical dinar banknotes or VND futures via tokenized platforms, all of it swirling in a director's cut of speculative theater. Officials in Hanoi and Baghdad are watching, silent. Neither central bank has issued definitive statements confirming or denying the speculation. In such pauses, rumor thrives. Policymakers may well be studying how best to respond. An outright collapse of speculative enthusiasm could destabilize currencies and economies. Acknowledgement could appear as capitulation, fueling expectation. Carefully crafted messaging or opaque non-denials may be the only tools available. If a statement is forthcoming, global investors will hang on every word, looking for nuance or shift in tone, whether an increasingly dovish undertone or a reassertion of tight control. Money managers in London, Singapore, New York, and Dubai are poring over simulated scenarios. What if the dong revalues by 3% unexpectedly? What if Iraq declares redenomination in the near term? Many run stress tests, examining capital flows, swap lines, and paired FX exposures. Risk teams predict that such moves could ripple beyond the currencies themselves. Emerging market contagion could rear its head, particularly for other frontier market currencies. Are we witnessing the first tremor of broader emergent market realignments, or just an isolated spark? In the meantime, retail platforms are bracing for a surge in customer queries. Customer service lines and chatbots are inundated with panic and thrill calls alike, some asking whether to rush into buying dong or dinar, others fearful they may already be too exposed. Compliance teams are filtering for pump and dump patterns, potential fraud, and overly speculative behavior. Regulation cases are being flagged. In many jurisdictions, retail platforms are required to warn clients about speculative risks when trading exotic currencies. That language is popping up more frequently, often alongside "this is not investment advice" disclaimers, yet mumbling that over a flash crackle of volatility feels almost perfunctory. All the while, traditional media updates its tickers. Dong soars amid speculation. Dinar buzz sweeps retail investors. Headlines may embolden some while horrifying others. The pace of change is dizzying. One moment, volumes inch upward in measured fashion. The next, screens light up with cascading spikes. Central bank proxies, rate trackers, economists, all are speaking in guarded terms. Monitoring closely, no policy shift announced. Valuations appear disconnected from fundamentals. For Vietnam, a managed float could hinge on inflation trends, export performance, and foreign reserve levels. If officials allow the dong to strengthen, import dynamics may soften price pressures, yet export competitiveness could slip. Conversely, a weaker dong might stoke inflation. Policy trade-offs abound. Any shift would require careful calibration. Many speculate that if such a move were even under serious consideration, the central bank might choose to announce a modest, incremental band widening rather than full float to dampen speculative extremes. For Iraq, real struggle lies in political cohesion, oil infrastructure resilience, and financial sector capacity. Without consensus or clear backing, any redenomination talk risks undermining confidence. The Iraqi dinar is not freely traded in global markets and liquidity is sparse, making sharp moves costly and fast. Unless the government backs change publicly with a roadmap, tinkering with redenomination could unsettle the broader economy. Yet in speculative corners, that is exactly what traders are betting on. Sudden, dramatic policy announcements, rich with dramatic promise. The next few days are pivotal. If either central bank moves, the ripples could be seismic. Even signaling through statements, committee meetings, or seemingly casual leaks can push markets rapidly. This moment feels like watching a powder keg beneath a teetering fuse. For traders, professionals, and watchers, it is decision time to bet, to hold, or to step aside and observe. By evening, trading screens are ablaze. The Dong is showing unusual intraday movement, though still within the official band. Forward points have shifted, suggesting heavier demand. The dinar is being quoted more frequently on one-silent platforms, with traders whispering of delays in platform halts to calm the frenzy. Margin requirements are being reviewed and settlement risk monitored. Call centers record surges in both excitement and panic. Meanwhile, central banks remain quiet, intensifying speculation. In summary, what we are seeing is nothing short of a speculative eruption over two undervalued and tightly controlled currencies. VND and IQD are simultaneously at the center of a storm of rumor, ambition, anxiety, and opportunity. Experts caution investors that without confirmed policy changes, this remains high-octane speculation, powerful, unpredictable, and potentially dangerous. But if policymakers do act, the consequences could be profound, affecting not only these currencies, but broader emerging market sentiment. Stay with us. Confidence is fragile. Markets are in motion. We'll bring you updates as soon as developments materialize.